right, welcome everyone. Welcome to the 5ers Live Trading Room. It's Wednesday, July the 24th, and the last live stream of the week. I'm always looking forward to going live with you, Victor, but I'm never looking forward to Wednesdays because it's the last day of the week. So, but we'll survive. We'll manage. We'll see each other, on Monday. So it's just a few days. Now, hopefully, you guys are all good, and let us know in the comments if you're in any trades right now, anything specific that you're watching. Victor, how's your Wednesday been so far?
Hi there, everyone. I'm excited as always. I am. Thank you for those kind words. I'm happy to share our sessions together as well. But especially, I'm excited to share time with our viewers. This is energizing when we stand in front of the camera and we share what we think will be of value to you guys for your growth. And it gets me revved up. It gets me enthusiastic to be in this session. So that's the vibe that I'm starting today with. How is the day going? I didn't have any signals. I don't have many signals all the time, but we just had a very nice reaction on GU, so we can talk about that later. But as always, the market has full of surprises for us. So yeah, I'm ready for
That's
it.
right. Full of surprises indeed. And one pretty surprising thing that happened over the was it last weekend, right? We, as you guys probably know all about, we've been getting a lot of questions on the upcoming US elections and how that might affect the market. So I thought we were going to take a moment here and talk a little bit about our views on this and how we think it's going to affect the market and how we're planning ahead to basically how we're planning ahead with this event in mind. So I think all of you probably living under a rock if you haven't seen what happened on July the 13th when there was this assassination attempt on Donald Trump. And I said to Victor, right before going live here, that it's such an insane news cycle that we're on here. So, we had the assassination attempt on Trump on July the 13th. That was not last weekend, but the weekend before, if I'm not mistaken. And then the day after, Biden is announcing that he's dropping out of the race and he endorses the current Vice President Kamala Harris to take up the torch and run for office for the Democratic Party. So you have two major happenings right here. Like first, the assassination attempt on Trump is just that in of itself a historic moment, just absolutely crazy what happened. But then also Biden dropping out and endorsing the potential first female president of the United States is just such a huge thing. And yeah, it's major here. So what do you think, Victor? Does this election have the potential to change the overall market dynamics and affect the markets in any other way than what we've seen in previous elections? And I'm going to bring up a chart here as well while we talk about this.
Not being a expert on political science, I would think this election, and perhaps they say this on every election, but I think this election is different because, as you said, I mean, an assassination attempt on one of the candidates, a president, incumbent president, not being able to postulate himself anymore as a candidate. That doesn't happen on every election. Those are things that are different this time around. And the potential first time, as you said, a female will be a U.S. president. This is different. So I would argue that uh, yes, I think it will be different than usual. But then again, we have seen different election bringing different conditions to the table, and the statistics, they still point to, sometimes, not always, they still point to certain directions. So I think it is different, but at the same token, I would say let's not throw away every statistics we have, because we are we are traders who base ourselves on data, and the data have, in certain occasion, they do have a direction for us to think into. One thing is for certain, is that we're quite near the election, relatively near, right? It is what is it, 4 months or so? And if
Yeah, it's on in November
11, I think.
the fourth, the fourth. Yeah, maybe 11th. I'm gonna yeah, beginning.
And but any case, it is in November, so that's a little less than 4 months away. And what market do not want, what they don't like, is uncertainty. And all of this brings a lot more uncertainty than a usual presidential election year. And I would say that that brings a lot of more risk to the table, but with risk also opportunities. So I would say it's very exciting. And
Yeah,
I mean to say this in a neutral way, without having a judgment of, or whether one candidate is better for the country and the world, just in terms of a neutral trader point of view.
yeah, absolutely. I mean, that's the goal here, to view this in a neutral way and see how the markets is actually reacting. With that said, the image that we got from Trump when he stood up and kind of pumped his fist in the air, as crazy and as insane of all of that is, we witnessed a historic event, and that image, I think that image is going to be remembered for a very very long time going forward. And I think he Trump actually increased his chance of winning the election after that event. I think a lot of people started sympathizing with him after that event. And like I told you, Victor, before going live here, I mean, if that was me, if I was having a speech, if I was up there on stage and I got literally shot in the head, I would not be standing up. Like, I would not be standing up. I would lay down and I would let the Secret Service just jump on me and protect me. But what happened right there was just such an iconic moment, and I think for me at least, that it's sort of like it's like a Hollywood movie. It's like an American Hollywood movie. And then and like I said, that in of itself would have been just an insane event. But then the day after, it's like Biden drops on, and then the Kamala Harris comes on. It's just a lot of things going on. But I
I
wanted to look here. Yeah,
Yeah, I want to say I mean, Donald Trump, you either like him or you really don't, right? It's very polarizing person or figure, and whether you like whether which side you are on that spectrum, you gotta give it to him. I mean, that was some heroic imagery he gave us right there, and you can't. I mean, unless if you go to some extreme theory, you can't make this happen, right? It's not something you can you can make this up. I mean, it was in the heat of the moment, and he had this heroic, very American, right? American kind of movie like standing up. Looks like any good movie blockbuster scene where the character being in front and facing mortal danger stands up and faces heroically, right? That's what we got. I mean, whether you like him or not, whether you're Democrat or Republican, doesn't matter. This, you gotta give this to him, this credit to him.
yeah,
This That was a immensely powerful imagery he left us with.
yeah, absolutely. Yeah, it's crazy. I wanted to look at the higher time frames here, and kind of look at the idea here on the higher time frame. So we're on the weekly here, and as you can see, we got Bitcoin at the top, and then we have gold in the middle, and then at the bottom we have the S&P 500, and every vertical line here is past presidential election. So you have on October 2012, you have Obama winning, and then you have Trump in 2016, and Biden in 2020, and then the next will be on the 5th of November. And what's interesting here is that looking at the higher time frames, it doesn't really matter. Like the US election does not really move markets in a way that is completely changing the overall trends of the market on the higher time frames. You will see that um, Bitcoin was in an uptrend before each election and continued that uptrend after every election. Gold, I mean, gold, you could say that you reached the top before Obama and then you had a downtrend after Obama, but you had a downtrend all throughout the beginning a month after Trump here as well, and same with Biden. So looking at this right here, and then of course S&P 500, which is just the S&P 500. It's just it's always in an uptrend. Basically, the stock market is always gaining value and creating value, and it seems like it's just in a perpetual uptrend, no matter who is the president. And you can see here from obviously Obama versus Trump, and then Biden had very different ways of different policies when it comes to the financial market. But this is on a weekly, and we're not seeing any huge changes in any of these assets right here. So what's important to understand is that the US election does have a strong impact on the financial markets, but you should treat it as any other red folder news, any other major news events. So when you have the US election coming up and it's getting close, maybe take it a little bit easy and understand that there's going to be a lot of intraday and short-term volatility that might, if you're trading from a 100% technical system, a fundamental happening like this, you probably haven't tested that and you don't really know if your edge is going to work in a situation like that. So it's better to probably stay out. And this happens, in the beginning of November, when, from my own experience, November and December is quite slow. Okay, so for me, trading kind of starts in February. It really starts, to catch up. So you should just treat it as any other major news events. But then if you look at the policies of the potential candidates, that could have an effect on long-term trends. Obviously, if you have very, very different policies with two different presidents, and we don't really know a lot about Kamala Harris because she has not been campaigning on her policies. She's been running as a vice president with Biden, so we don't really know that much about her policies, but we can assume that they are going to be similar to Biden's. So, when we're comparing the two policies here, and also we can look at the election in 2016. We did have an initial move to the upside when Trump came into office, and when it was clear that Trump won over Clinton. We did see a initial move to the upside, and I think that was mainly because Trump had a very pro-business stance where he talked a lot about pro-business policies and tax cuts. And then when you look at Biden's election in 2020, it obviously happened during the pandemic, where you had a more focus on economic recovery and a lot of focus on healthcare, which is obvious because you could it's during the pandemic. And historically, when you look at the elections, you've seen that the market tends to react more positively to policies around, reduced corporate taxes and perhaps even reduced regulations around that, which I understand that Trump has been talking about, but also there's a lot of perhaps fears and worries that Trump's trade policies and potential geopolitical tensions could introduce some volatility. Because it's important to remember that the market favors stability. Like if there's uncertainty, then investors tend to react irrational, right? So the market tends to favor stability over instability, and I think this election here will. There's going to be a lot of focus on, first of all, inflation, right? Because we've all seen that during Biden, he introduced the, I think it was the American Rescue Plan, where it was aimed at basically economic recovery during the pandemic. That was a 1.9 trillion package, which is a lot of money, and that contributed to inflation. Okay. So next, this election will most likely be that there's going to be a lot of focus, most likely, on inflation, because I'm sure that you've all felt the effect of inflation. Prices is going up in the store, but your salary is not going up. So the everyday living expenses is going up for people, not only in America, but pretty much all over the world. So I think that's going to be a very important aspect here, and the and also important for the economy, right? So I think that and when I think Trump is he talks a lot about more aggressive tax cuts and deregulation, and this I think this can boost short term growth. So if Trump wins, I do suspect uh, a push to the upside, a strong push to the upside because of his expected pro-business policies and tax cuts. But then if you look at how this might impact the long-term economy. Now, if you look at this weekly chart right here, it doesn't really seem to matter that much in the long term. So I think this election could have a lot of impact on short term. And I think with Kamala Harris, there's at this moment, at least, there's a lot of uncertainty. So I think she has to make it very clear what her policies are to create stability here. But we already know what Trump is doing and wants to do. But the reason why I have Bitcoin on here is because Bitcoin and the overall cryptocurrency market is one of those assets where a speech by one person could completely change everything. We've seen in the past where Elon Musk tweeted about Dogecoin, and it completely just started a journey to the moon, going up like 300% or something like that. And he also announced that Tesla is adding Bitcoin to its balance sheet, which made the price of Bitcoin go crazy. Now, on the S&P 500, which is an index of the 500 biggest companies, it's not going to affect the market that much. But on something like gold, Bitcoin, it could definitely have a huge impact. So what I personally think is of interest to me, and probably to a lot of you watching here as well, because with the 5ers, you are able to trade Bitcoin as well. And I know a lot of you watching do have positions in Bitcoin, at least long term. So it's interesting to watch the differences in policies on the cryptocurrency market. And Trump has, and this is the thing with politics, and especially now that we're coming up to an election. Trump has said very positive things about crypto and Bitcoin, and he has also said very negative things about Bitcoin and crypto. Now, of course, now that we're coming closer to the election, it seems that he's making a few speeches that are very positive towards crypto. And he said during one speech that he talked directly to crypto people and said, like, if you elect me, then I'll make sure that I'll support the Bitcoin mining operations in America and things like that. So he's trying to get votes, right? And the problem, with any democratic election, well, maybe not the problem, but that's just the nature of a democratic election, is that you can say things to get a lot of votes, but you don't necessarily have to do exactly what you said you were going to do. So, well, it's going to be very interesting to see if Biden is going to continue with his pro crypto stance. I also saw that he's going to attend the Bitcoin 2024 conference. Trump is going to attend the conference, and he's going to speak at the conference. And obviously, this is signaling huge support for Bitcoin. And he's talked about viewing the crypto market from a more basically regulating the crypto market less. And as of now, I don't think it's confirmed that Harris has any interest in the Bitcoin 2024 conference, but I have seen on Twitter that there's been some mentioning on that. So yeah, it's interesting if they're both gonna show up there. And one thing that I find very interesting when it comes to the difference between policies here when it comes to cryptocurrency is Trump has been very vocal about his has been very vocal against a CBDC, which is central bank digital currencies, and he has promised to protect Bitcoin miners and crypto holders from a system like a centrally controlled digital currencies that could potentially be quite negative for the whole wall of crypto. While on the other hand, you look at Biden, the Biden-Harris administration was very cautious when it comes to crypto, and while Trump wanted less regulation and more innovation, Harris and Biden talked about more customer protection and financial stability, which is not a bad thing. All right, absolutely not a bad thing, but that there is a very big difference in the language that they're using. So I think that if there's one market that has a potential to really be affected by this election, it's Bitcoin. I really think it's Bitcoin, because here the two candidates are in two completely different camps. While of course they are in different camps when it comes to the overall market as well, but you've seen that the overall market doesn't long term change its trajectory completely. But with Bitcoin, it's much more sensitive, which might actually mean that it could completely change the overall structure.
Yeah. I think the keyword, what you just mentioned, I agree with you. The keyword with Bitcoin is sensitive for regulation, and because regulation means risk for Bitcoin and Bitcoin holders, right? So and that's the measure that will decide whether one candidate will be favorable or unfavorable. Will it have more regulation or less regulation? And we know that Trump typically is in the camp of less regulation, and the Democrats and Biden, Harris, if we assume that she will have the same policy direction, will have more regulation, right? So it's an elevated risk for the Bitcoin industry if it's an added. Doesn't mean it's going to be catastrophic if she wins or the Democrats wins, but it will have more risk to it than a Trump win. I think that's the takeaway. I agree with you.
I think if Democrats win, crypto will continue as it does today. Because I don't think they're going to change much in the current landscape. There's still a lot of regulation with the cryptocurrency market. But if Trump wins, there is the possibility of if he does anything that he says he wants to do, then that could be good for crypto. But we all know that there's no there's no certainty that anything that they promise will actually happen. And we've seen time and time again candidates for different election coming in and saying, oh, I'm gonna do this and that for the cryptocurrency market. I'm gonna do this and that with taxes, and then it's like, oh well, okay, I'm not going to say there's a lot of lies. I'm not going to say that. That's because it's obviously quite complicated. Everything is, we live in a very, very complicated world from a geopolitical standpoint. But we can't really assume that everything that says is going to be done is actually going to be done. So at the end of the day, it's all about what is actually happening and what papers are being signed. Now, another very interesting thing with this election is during the Biden administration, a lot of focus has been on the Federal Reserve. Okay, inflation. We had the huge package from Biden with $1.9 trillion to stimulate the economy, right? During COVID, which seems to have worked quite well during the pandemic. But then after the pandemic, you have to take care of the negative consequences of printing money, which is inflation. And there's been a lot of talks about the Federal Reserve and its neutrality. Okay, so the Federal Reserve is an institution that shouldn't have anything to do with the it doesn't matter who's the sitting president. The Federal Reserve's job is to create price stability, basically stability in the financial markets, and make sure that the currency is stable. That's their job, and it doesn't really matter who is president. That's still going to be their job, and they are not affiliated with any of the political parties, even though different political parties can assign people to the Fed. They still have to do an unbiased job, if you will. But if there's one person that has been very vocal about his stance on the Fed, the Federal Reserve, it's Donald Trump. And he's again and again said that he would like to see more more influence over the Fed's action, because as he put it, it's completely insane what they're doing, and he wants to make sure that there's more insight into what the Fed is doing, and we have the potential of affecting the independence of the Fed. Now, that is something that will move the markets significantly, and it will affect most likely all markets. And that's a major thing. Now, before you write in the comments and say that, oh, you can't affect the Fed is unbiased and independent, well, it has actually, there's certain times in the past where this has actually happened, where one notable example is when President Nixon had a close relation, behind, outside of the public light with Arthur Burns, I believe his name was, the then Fed of the share, where he influenced the Federal Reserve, even though they're supposed to be independent. So it has happened in the past, and it can very likely happen again. And that's something to look out for. So it's two things that I'm watching out for. It's the potential influence over the Fed and the potential influence over the cryptocurrency markets, because that's things that I think is tradable. We can use that as an edge. I think that is something that could very well be tradable. So, for example, if you're trading Bitcoin and you're in a long-term position in Bitcoin, and we're reaching high time frame resistance, and Biden promises positive impact on the crypto space, while Harris talks about more regulation, and then Harris wins the election and Bitcoin is at resistance, and you've made a lot of profits, maybe that's the time to sell. But if Trump wins and you see that we got that resistance above, maybe you want to hold on to the position, because it seems like the next American president is actually positively is interested in deregulating the crypto market. So those are some of the things that you could have in the back end if you had it is actually tradable. When it comes to the influence over the Fed, that's something different. That's more about being very cautious, because that could very well bring a lot of volatility for all the market. So that's my general take on this election and some of the things that I'm interested in seeing, and it's something that might be tradable. But all in all, the bottom line is I'm going to be cautious when we're getting closer to the election, and I'm going to treat the election just like I'm treating the non-farm payroll. Okay, the difference here is that the effects on the US election is going to be you're going to see the effect in the market for probably several days, and not just an hour like the NFP. Like with NFP, you have like an hour that is critical, and then it has the potential to continue the trend or break the trend. But with the US election, there's going to be the news flow picks up. It's going to be much quicker the closer we get to the election, and happenings. It can be happenings from a day-to-day basis that might add a lot of volatility to the market.
Not only that, NFP, I think also we have a specific time where everything happens. And with the election, you of course you have it's not one specific moment in time that you know the winner, right? So it's the hours and actually the days preceding the election. There can be polls coming out, right? And that can, or something can happen during the campaign, uh, either to one of the candidate or some there are different things that can happen that can have a peak in volatility. And as the election is coming nearer, it will have more of that until there is a resolution. And there's another thing I think as well is valuable for the viewers, is that if there is a clear winner, right, that's good for risk on, right? Because there's clarity, there's less uncertainty, right? Who won? But if the election result is very close, we probably will have an extended period of volatility, because especially with Trump, he's probably going to contest it, and that will bring more uncertainty. And it's not going to be just a couple of days, but perhaps weeks on end, where there's uncertainty, who won and what's going to happen. And that's something we have seen in the past with Trump, but it's certainly going to happen again. If he loses by a small margin, we will have something we saw in the past again. So there is a little different dynamic in terms of, yes, it is. I agree completely that I would treat this as NFP as well. I would be, very cautious having anything open during those days, and because we need to be very aware of, the longer you hold that position and the bigger that position is, that risk is, exponentially higher than normally. That's one thing, and the other is, there's not that single moment in time where we get the move. The move can happen before the election, hours before, even a few days before, and even after, if there is like a recount, right? If there isn't a recount, right? All those things which you don't know when they will happen, but surely they can be a driver to of an impulsive move, an ignition for an impulsive move, either a reversal or continuation. So it's very tricky, but at the same time, we can already see that if you are on the sidelines and you see some very outlier movement in the market, there is that possibility to fade it, right? Because most likely than not, that movement will be exaggerated. Like everyone else who wanted to be in the game and they were caught offside, now quickly want to close their position, and that's going to exaggerate either side of the movement. I mean, either side is, even if it's going to go up or down, doesn't matter. There will be exaggerated moves, and we as traders, we can exploit, or we can capitalize on those opportunities to see, read price action, and realize whether it is extended or exaggerated or not, and trade accordingly. So it is risky, but also it can be also very profitable.
Okay, with that said, I think it's time to leave the discussion on the US election, and I'm going to be lowering my screen here because I need to be sitting down for this. Are you guys ready to look at my gold trade that I've opened just a few hours ago? So I think now it's the perfect time to transition into some actual live trading. All right, so guys, let us know if you do have any questions on what we've just talked about. I'm happy to hear your views on this subject as well. But I think what you're all here for is actual live trading. So what I want to do now is I want to break down this trade right here that I have on gold, and I want to talk about why I took this long on gold. So you can see here that let's see, let's put it over. Well, it's quite simple. We have a reaction on a support. We have a daily bullish engulfing candle right here. I think it's actually best if I go to completely clean clean chart, and I think that's going to be the one. So we go to gold, and then do we have any drawings on here? Well, I do have some here. Let's remove all of this. You know, I don't know about you, Victor, but sometimes I like just removing all the indicators and starting fresh.
Yeah, me too. There's something pure about that.
Yeah. So what I'm going to do here is I'm just going to add a level here. That's a good looking support right there. And then you have the breakout move right here. So I'm going to be adding a fib from, let's see, probably, yeah, I've got it. So I'm going to be selecting this wick right there. This wick, but that wick is lower. So why am I selecting this wick right here and not the one to the left? Well, that's because this is the breakout move. So we have rejections. We got one move and then the second move. So I'm going to be adding the low of the fib to that one. And then of course the high of the fib goes on this high. I'm going to be extending it a bit to the right. And what you see now is you have a almost a, yeah, well, I would say a perfect reaction to this level right here. Not only that, but you also have a daily bullish engulfing candle right here. So a daily bullish engulfing candle. And then what I did was I saw that we have a daily bullish engulfing candle. The bullish momentum is coming in. And at that point, what I decided to do was I went into the 4-hour, and on the 4-hour, we're seeing this structure right here, which is exactly what I want to see, where we have a strong move to the downside, a lower high and lower low, another lower low, and then I would actually view this as a rejection here because that's a big wick, it's a big candle, and I'll show you in the 1-hour as well. And then we have a higher low here and then a higher high. That was the basis of this trade. And when I saw this, I had this bearish candle printing right here, and I decided to add, maybe this was on the 1-hour. Yeah, so this was on the 1-hour, and then we can look at this overall structure from this perspective, where you now have a very good structure, a very good, this is a break of structure, and you can clearly see why. Again, you get the low, high, and if it's forming this. And on this bounce right here, that's where I decided to get in on the trade. Now there is, I had opportunity to get in on this trade yesterday when we had the retest of the 0.618 right here, because this gives me a similar pattern. Okay, you have the downtrend here, then you have higher lows and higher highs as well. So this, and I'm actually answering this question here from Henry. Do you want to wait for price to reach to retouch 0.618 before entering? Well, if we go to the 4-hour, and you see that that was actually the retest. The retest is here. This is the candle that confirmed the setup. Okay, it's giving me that structure. And what I would have done is yesterday, I actually got a really good signal. So yesterday, I would have gotten a much better entry. That would have been the trade from yesterday. And the thing with this entry is I could have just exited right on that very top for a 0.63 R trade, and I would have been in a winning trade right now. So that would have been a winner. And then again, I could have entered the same trade that I'm in today right here on the retest of the next level above. And then I would TP at perhaps somewhere around this area. So I've been filled here, and I believe this is actually the trade that I'm in. So as you can see, this is the current trade that I'm in right now. So I'm looking for a move up to this level right here, which I believe is the immediate FTA right there. And I'm front running that by choosing that little wick right there as my TP. And then again, a very, very wide stop loss here, all the way below the structure, in case anything happens, because we do have
Yes.
news events today. So we'll
Yeah.
see. I think we have
It's
that at
there's manufacturing in about 1 hour.
yeah.
Flash manufacturing, flash services PMI, and in an hour and 50-minute more or so, we have new home sales. Although that's an orange folder, but we do have interest rate decision from the CAD, from the Central Bank of Canada. That is, of course, not the Fed, right? So it's less impactful for gold. But gold has a sensitivity for interest rates. So because it may indicate how other central bankers are viewing the situation, although it's not the same. It's a different economy, different country, but they're very intertwined. So it may react a little bit on that news as well.
Yeah. So that's the reason why I have such a big stop loss right here. Now, if I'm unlucky, then this stop loss could be taking out with a wick. But looking at the overall structure here, I'm quite happy with. I have a very strong confirmation here. I have a daily bullish engulfing within the real zone and the horizontal level, which I feel somewhat comfortable having. Being in this position and having a wide stop loss. Also, the fact that we had that initial move up now tells me that there's. Like the thing is, if I'm trading up here right before the news, well, I'm going to take profit. Maybe even if I'm trading here right before the news, then I'm also going to take profit, right? So the thing is, if I'm trading down here right before the news, maybe like it's about like where is price currently like before the news. I don't want to risk a move like this, if I'm up here when there's a news event. Like, no way I'm going to give back that profit. So if I'm in profit right before the news or around break even, I'll obviously have to make a decision about that. But right now I'm staying in this, and yeah, we'll actually have the news during the live stream. So it's going to be interesting to follow this. So yeah, in the comment, we have someone in the comments saying that I was hoping that Anastasia was back. She was great. Yes, she was really really great, and we're definitely going to bring her on again. And then Timur says, does she trade ICT or SMT? No, she doesn't trade ICT or SMT. She just trades her own analysis, basically. Okay, we'll see here. Are you guys Okay, are you guys expecting the Bank of Japan to intervene during the PMI? I have no idea. Like, I'm not qualified to comment on that, if I'm going to be completely honest, and that's why I'm staying out of the events. If you're floating profits more than surplus, you're waiting for when there is news. My rule is close it. This is a very good rule. Okay, this is a very good rule, and I think actually that's what I should be doing. Okay, that's because when I kind of explained my plan here, I'm like, I quickly understood that, you know what, I don't have a plan. I don't have a plan.
The
So,
idea, Evans, what you're referring to is the concept of a revolving R, right? You are the when we think about R multiples to assess the opportunity or the risk and of any trades we put on, we sometimes we tend to think that it's a fixed risk reward ratio, and it is fixed as long as you haven't put in the trade yet. Once you put in the trade, it is fixed for only that moment at that price. Once you go in profit, that ratio of risk and reward changes because now you have floating profit, and that's exactly what you're referring to. That's the idea, the concept of the revolving R, and it's something I use all the time to assess. And I think you know, more people should use that because it's very helpful to assess what is my risk while I'm in the trade. And it's not only the risk from your entry to your stop loss, but from actually, if you have floating profit, that's also part of your risk, because that profit can be, you know, be materialized if you decided to. So it is at risk. The risk now becomes the profit plus the stop loss distance to your entry, and that changes the ratio. And it's a very interesting topic, and I think if you think about it and incorporate it into your trade plan, it will have a beneficial effect on you. One just mental experiment. When you are, let's say, 2 pips away from your TP, what is your risk? If you not certain about the revolving R multiple, ask yourself that: is my risk still my stop loss only from my entry to stop loss, or is it the whole profit that I'm almost getting here? And if you missed it, right, if you that's the risk. Your risk becomes completely many more times bigger than the profit you can still have from that trade if you just close it right there. You're only going to be, you know, you're going to be risking the whole distance to your stop loss, only for that 2 pips that is still remaining to be gained, right? And if you think in that way, I think you're you're ahead of most traders.
I think it's a dangerous road to go down if you're not experienced, because I think it's very important to think about it, but it's way more important to understand what it actually means, because when you start to think about unrealized profit and loss as added risk, it will also create a lot of emotional stress, because not only are you thinking, when you're taking the trade, you're thinking, I'm risking 1R on this trade, but if you're up 1R, now you're risking 2R, which is true, because there's nothing free in the market. If you're when you're up 1R, you're not risking 1R on that trade. You're actually risking 2R, because you're risking giving away your unrealized profit and loss. Now, it's very important that you, when you think along these lines, you don't make anything impulsive. Like you take profits just because you feel like now there's more risk to the trade. But you have to understand that you have to ask yourself, what's best statistically to do. If you see that when you take profit every time you're up 1R, then that might be very, very profitable, right? Then you want to continue doing that. So you have to rely on statistics, but you also have to understand that in situations like this, like with the news coming up, is it better to take the profits when there's uncertainty? Of course there is, always. This is always going to be better to take the profits when there's uncertainty. This is a good question right here. We have, I see your stop loss is always wide. how do you do the risk? Are you risking 2R to get 1R? I'm okay. So it does. You don't risk 2R. You can only risk 1R. Okay, unless you decide that you have 1R for you is a specific. Maybe you're talking about the risk to reward ratio. Yes, I'm risking 1R to make a half an R. So I'm risking more than I'm actually winning. And the reason for that is because we got news coming up. There's a lot of uncertainty in the market. This trade is based on the daily, but my TP is not based on the daily. So my entry is always based on the 4-hour, which means my TP is always based on the 4-hour. But the stop loss is always based on the structure that created the entry. So the structure that created the entry was the daily bullish engulfing candle with the candle before it. So the way I view a entry trigger candle is I always have to take the previous candle into account. The low of the previous candle in this case is part of the structure that created the entry. So if we go down to the 4-hour, you'll see here that the structure that created my entry is not this candle. Okay, it's this structure right here, which means that my stop loss needs to be below the whole structure. And my FTA in this case is the immediate, like the very, very first area where I think price will run into profit. Honestly, the very first area is going to be that one right there, the one that we're using as resistance right now. But that doesn't really make a lot of sense. It would have made a lot of sense if I was trading this on a lower time frames and I had my stops below the structure, then this would be a good trade. But that's not the way I'm trading. So looking at this also with the fact that if you go to the daily, there will be a level around this area, like right below here, there will be a level. So actually now looking at that, it might actually, I might have my TP a little bit too high, but my stop loss is too wide.
Where do you have it?
I have a TP at 24.28. I think I have to lower it because that's a daily high. That's a daily level right there. Yeah, I need to lower my TP. The risk to reward is going to be very low, but I had to adjust this. I should have adjusted this in the beginning. This is not a good placement for TP. I'll have to move the TP here. So what I do is I place TP on that high right there on the daily. Let's see, let's remove this level so it's a bit cleaner. And then I go into the numbers and I look at this and it says 20 is a 5. See where I can put it. Can I put it at 24, 25? What happens if I put it at 25? Nah, that's not good. Okay, let's just put it at 29. Okay, so what's the risk to reward? It doesn't really, like, the risk to reward doesn't really matter because I need to stay true to what I'm actually trading. So the risk to reward is below 0.5, which is obviously not good. And now I got an alert as well. The fact that it broke above this low time frame level tells me that I can now start securing the trade. So if the 15-minute candle can close above this level right here, then I will start securing this trade by moving my stop loss here, basically removing more than 50% of the open risk. So that will be the trade. And we're coming up. We get the news in about 45 minutes or 50 minutes. But yeah, I'll have to change the TP, even though the risk to reward of this trade will be very low. That should have been my original TP. So in the past, when I was new in trading, when I started trading, I would have kept the TP. I would have kept the TP, and then I would hope for it to hit. And I can't do that. There's no hoping in trading. There's only execution of your edge and nothing more. Like there's no emotions attached here.
Well said. Well said indeed.
Yeah. Like I don't really care what happens. This can hit TP, hit stop loss. I don't care.
The gold is pushing up, so it is going in your direction, and we have in 3, or actually in 2 minutes and 3 minutes and a half, more or less, we have the H4 bar closing, and we had
that's
before
perfect.
The previous candle was an outside bar, right? As we always say, or as I always say, that's something significant. Outside bar is something you want to be noticing, because it tells you who just got into control. Normally, I would expect price to come back into that order block, and that's the way I trade on the higher time frames. On the actually, I said it incorrectly. On the H1, the previous bar was an outside bar. On the H4, we're now getting a H4 that is an outside bar that is going to close as an outside bar. So in 3 and 2 minutes, we'll have a closed, confirmed outside bar on gold, right? That's something significant. So
It is.
buyers are in control. If
and not only is it an outside bar, it's an outside bar after a breakout. So you have a breakout and then an outside bar. This is bullish momentum. Like this is the definition of bullish momentum.
Actually, it's I'm not sure if it shows on your price feed, but it's a outside bar back to back. Right before this, there was an outside bar.
Oh,
yes.
it is.
Yes, yeah.
Nice.
So you have a outside bar and another outside bar right after. So that tells you, if you didn't pay attention, if you didn't notice before, that the buyers were in control, now you have.
And we can look at some pretty good compliments here. If I add the 20 EMA and the 5th as well, you have really cool, good compliments right there. Breaking above those, but not now. I'm just looking for confidences. This has no significance at all. No significance and no edge here at all. It's just me as a human. We tend to like looking for patterns, and when we find patterns, we're like, oh, look at that, look at this, it's a coincidence. But yeah, this has no significance at all, really. A lot of times you'll see YouTube, trading influencers and YouTube, like us, but not us, other people. You'll see them and they say like, "Oh, look at this! Look at the breakout! Look at the breakout above the EMA! Like this is how you're supposed to be trading. You're supposed to be trading that breakout," and it, like, shows a couple of examples. But guys, it doesn't matter. Like, it doesn't matter. You can trade however you want. Trade however you want. As long as you are consistent with the way you're trading, chances are that you will be profitable. Which is, it might sound weird. You might say like, but can you really trade however you want? If you understand the fundamentals, or the very the fundamental and the very fundamentals of TA, you will be profitable with a consistent approach. Nice. Very good. Very, very good. Very happy to hear that. What's SMT?
Smart money techniques, I suppose. I'm not sure.
Really?
I would guess. But the important part is that people are getting value and results from spending time watching this stream, which is exactly what makes us happy, because that's the idea. That's the whole idea. The whole idea is that you watch us, right? You may not agree with us necessarily on every ground, and you don't have to, but you pick those things that resonate with how you are, how you trade, and you try to incorporate them. Test them first, right? Test them if it makes sense, if it has an edge, if it has a positive expectancy. But once you see that what we say and use can be useful to you, of course, by all means, we want you to use it. If it is going to increase your profitability, that's the goal. The goal here to help you become a better trader. So comments like that makes me warm inside.
Right now, we got the 4 hour closing here, so I moved that stop above that wick. So this is again looking at what price action is right now. This is still a quite it's still a quite wide stop loss. Stop loss being at this red dotted line right here. Now, if you assume that your entry is here, then this is actually still a wide stop loss. But also one of the reasons why I'm using a very wide stop loss on gold is, well, actually, that it doesn't matter. I'm always using a wide stop loss. But one of the reasons why I think it's a good thing to be using a wide stop loss on gold is because gold is very unpredictable, and there's so many unforeseeable movements, and there's a lot of wicks on gold that has to be taken into account when trading it. By the way, guys, make sure that you do hit that like button. If you haven't hit the like button, please do so. It's would very appreciated, and it's very helpful for us as a channel to grow the channel. And at the end of the month, I'm thinking about maybe doing a sort of some sort of giveaway at the end of this month. I can't promise anything, but some type of giveaway I want to do to kind of end the month and start the new month in a good way by giving something away. We are working on, I keep talking about merchandise, and I want to be able to give it away. I want to be able to give away a shirt or something like that. I would really love to do that.
We have another viewer who has some good results with tools or concepts he gets here. Of course, it's the baker talking, giving compliments to his own bread. But I mean, there's no one else who can say anything about these comments.
Okay, so
there's no other
way. We're getting good comments. I mean, Henry has obviously had success with the reload zone, and Bell. I think I can say Bell. Also, more disciplined. But guys, it's not the reload zone. Okay, it is not the reload zone. You're disciplined because you're waiting for price to hit the reload zone. So it's not the reload zone that helps you. It's you that helps you. So you have to give yourself credit for being disciplined. Okay. Now there is tools that can help you be disciplined, but trust me, 99% of people out there that are trading right now is very inconsistent and undisciplined while using the tools that should make them more disciplined. So it's not about the tools that we give you. You're doing all the work. And if you're able to patiently wait for price to hit the reload zone, that's 100% you. And just continue doing what you're doing that works, because it doesn't matter if you call it the ICT's OTE or my reload zone or whatever concept you're using. If you're successful and disciplined, it's because you're successful and disciplined.
Yeah, the strategies, basically, if you think about it, when you have seen different strategies and you see that many of them can work, not necessarily all of them necessarily will work, but a lot of them from different perspectives, they can work. I think what we can conclude is that what is actually helping people becoming more profitable is having a fixed framework of how you approach the market, a step plan, right? Something you wait until this happens before you do the next step, right? And when you don't have that, you lose yourself in the randomness of the market. But if you have a plan, have a flow chart, either mentally or written down, that's a framework. That is a objective framework of what needs to happen before you go do the other thing. And that can be ICT, that can be reload zone, that can be whatever you want. It can be something you created yourself, but that will give you that consistency that you need to have to be profitable. So it is about having that fixed framework from where you act or you trade.
Yeah, definitely. Well said. Victor, I'd love to take a break, a 10-minute break. Need a quick break, get some more coffee, and this time let's just do a 5-minute break. I know the timer is on 10 minutes, but let's just do a 5-minute break. All right.
All right. I will do the clicking.
Nice. All right. See you guys soon.
Bye bye.
All right, we're back. All right, Victor, I removed you. Sorry about that. Let's see. All right,
No
gold.
problem.
Gold is looking good. Now I think it's time to look at the lower time frames here, because we do have news in about 30 minutes, which means I now need to need to start looking for the first signs of potential exit. And I think I don't want to give anything back, so I'm gonna move my stops up here. In case there's some uncertain volatility, because I want to be exiting this prior to the news, and I'm looking at this as my invalidation level, looking at the 15-minute. Well, you know what? No, I'm actually going to be looking at that as the bounce of the neckline of this W on the 15-minute. I don't want price to get below that neckline. We can see a move down here before a move higher, but again, like we it's only about, after this 15-minute candle is closing, there's only 2 more 15-minute candles to be closed before the news event, which means there's not a lot of room for price action to develop here. So we'll see. We'll see what happens here. But right now, I'm looking for signs to get out of this trade and secure the profits. Are you watching anything?
Yes, I got into a gold trade as well, a little gold trade. It did not come all the way to my order block, so it is different than how I usually trade, but still it is based on the order blocks and the market structure on different top-down analysis, and I can show you guys the trade right here. That's the trade. Then I can switch back to trading view to explain why I took it. My TP is at, it's not really based on anything but the ATR. This is 100% ATR. Doesn't mean I'm going to let it run all the way there, because of course we have news. I may or may not leave it open for news. It is a small trade. I'm risking 100 here, $100. So, but that's how I like to trade, right? Taking small pieces of the market and in small, steps. And if it starts going my way, I start to add to that position. Yeah, I will switch back because I would like to share how and why I entered, and what I will do if this gets stopped out. Let me remove this, and I'll put your screen back, Jonathan, while I go to the my other screen, which is this one, and we'll share this one without the sound notifications. There you go. So what I see is we have it's based on the daily, right? We have broken. We are on the daily. We are in a bullish market structure, right? We broke previous high, and we're making higher highs. And we've talked about this before. We were in a range, and we switched. Here we switch on the higher time frames. We had a quasi which worked nicely, and we are still in that well, we had an impulsive run, and this is, to me, is a retrace within that context, right? That is, a certain moment it's going to probably continue, because it's easier to trade with the trend, as Jonathan just mentioned a couple of days ago. So what do I do? What do I see next? We have the price left a bullish order block, right, on its way up. And when it is retreating, where is it likely to continue its path upwards? if it is going to do that, right? Which we don't know, but where is it most likely to be doing that? It is going to be doing that in a demand area, right? And that is what an order block is to me. So, and what it tries to do when it got there, it did have a squeeze with those 2 wicks, but in general, you can see that as it was very impulsive until it got to this area, right? Got to this area, formed a bullish order block, right? A new one, which is this one, telling us that it seems to be ready to do that scenario, right? Going from breaking the previous high, coming back into demand zone, and then it is now switching back to bullish order flow, possibly. We we have to take it with a grain of salt always, because it is no certainty in the market. Ideally, I would have wanted, and maybe this is something for a trade for you guys in the coming days. Ideally, you want to be taking this trade within this order block, right? If you do that, then you have a daily signal or a daily setup to move up, and you can target. Since this is on a daily, you can target even this high, maybe the previous high. You may have different options. We didn't have that trade. I didn't catch that trade. If you go to the lower, you can see that we did have a neckline, right? It has been broken today, but we are very clearly in a bullish order flow, right? You have bullish order blocks being formed one after another, right? So it is not decelerating by any stretch of the imagination, at least not right now. We have one here, you have another one there, right? See that? And you have another one that may be a borderline case. You'll have to check that with other price feeds to see if they all print the same kind of little candle. But if they did, and I assume for a little bit here that they did, it means that it has been forming those bullish structures. And not only that, but that what we just mentioned a few minutes before the pause, before the break, was that we have a bullish order, an outside bar. The market is reacting to an area. I'm gonna talk about this area in a little bit, but that's what the market is reacting to. We have an outside bar, which was never retested, and that may be the better area to get in, right? For a continuation, price might still come back into this area on its way up. Especially if we have some kind of a peak in volatility before, during, or after the news, this could be the great area to be buying. However, as you will normally see, what you have is once you close an outside bar, typically, yes, I wait for it to come back before I take it. And actually, let me draw the next order block that was. Let me get this. This is the outside bar, the last one that we just closed, right? So you have a formation of so many. That is not what I wanted, but there is a. Let me get this straight. We have how many were they? 2, 4, 5 order blocks being formed. This one has been taken out, so we need to take that out. We have 5 order blocks, so we're clearly in a bullish order flow. And the best area would be, if you're going to trade like a swing trade, I would wait for, as you guys know, I would wait for the retracement of the whole structure, right? But today I'm not trading this is not meant as a swing trade, just a quick trade within the daily price actions, with intraday price actions. So I would wait for the bigger time frame. I would wait for it to come retrace below the 50% retracement, giving us entries at any of these structures. They are overlapping, so they're not great at giving us buy areas, but it is what it is. But today, what I'm trying to catch is simply a trend, a continuation. After we are forming. Let me get a little bit of these structures, paintings out of the way. so we can I can focus a little bit, have it clearer. Okay, so what do I see is we have a order block, a outside bar, order block, outside bar, another outside bar. I don't know if you just heard me, but that's many outside bar, one against after each other. So it makes sense to expect that price will maybe not come back to retrace like very soon, but just, it isn't decelerating. So it seems to me like it may just continue, may continue to go up before it's going to retrace and get us those entries that I just mentioned within the daily order block. Okay, so that's the basis, and we have a this is the last order block that we formed, and we have for the fact that we lack for a better structure, I don't have anything on the H4 telling me where we could be targeting. The only thing I have is this outside bar, which could be the target for this trade, but that would be something more than 100% ATR on the D1, so it will be something for at least an overnight. So that's not something I'm targeting right now. As I said, this is only for a couple of hours for intraday trade, since it is not the bigger, better, optimal entry within the daily order block. What we do have is, if you look at the H4, right, this order block has been taken out, right? It's been invalidated. However, at the same level, we do have a bearish order block on the H2. And when you have these kind of confluences in structures, the market, as we know, the same as supply and demand area, the market tends to flip sides, right? So what once a demand area, now the market is indicating it as a bearish area or a supply area, and I would what I want to see in the market is price breaking out of this and continue. If it does this, then that is the confirmation that I should hold this for somewhat more longer, a couple of hours longer. If I don't see that, I would have to make a decision whether I want to hold this through news or not, and it's not going to give me this indication before the news, because we don't have that much time. We only have like 20 minutes. So basically, I don't have anything. I think I would let it run, since it's I think it's the risk is I can absorb that risk in terms of the opportunity. Otherwise, you have to decide whether you're going to hold it through to the news or not. Otherwise, it's going to limit your you have to take risks at some moment, as long as it is within the parameters of what is tolerable for you. So I would assess that this trade is within my parameters to have it open. Let's see what else. So what I'm trying to catch here is just the continuation of the bullish order blocks continuing, and the daily ATR is at around 41. So if this is, that's the thing, it is not decelerating so far, and if it's not decelerating, logically it has a high chance of just continuing the way it is. It has been showing us so far. If that is the case, then it has a good chance of hitting this daily ATR, or somewhere around it, maybe a little bit before that, maybe a little bit over, doesn't matter. But that's the general idea, as long as it doesn't decelerate and it doesn't, starts negating bullish order blocks, which it hasn't. It did have a reaction to this H2, but that's normal. So I don't get scared by that. I'll just see and wait. How does it handle it going forward, and we'll see. That's the basic idea.
Yeah, I've closed my gold closed my trade, my gold. I saw that it had some weakness right here, and it started breaking down below this level. I actually exited a little bit earlier. I think I got out around this level, but I'm happy with that because we do have a news coming out in less than 15 minutes, I believe. No, in about
19 minutes.
about 19 minutes, yeah. So I'm happy with that. Getting out in profit while I can. If there wasn't any news event, I would have held this trade because I think it's highly likely that this overall trend will continue to the upside. Just like you said as well, there's a lot of strength here in this market. So I think that was a decent trade. I've only really taken two trades this week, actually. One on GBP CHF and one on gold. It's been very small trades. Like this is one of them, and then this is the other one where I don't even think the setup is on here. Yeah, so this was one of them where I took profits up here. So it's one R plus. Is 1 R plus this month, but still it's better than nothing. Will you close your trade if it goes to half of your stop loss? Well, the gold trade is already closed. I've already closed this one. And the reason why I closed it, like I said, I wanted to see like if we didn't break below this level, then I would hold it. Then with the news coming up, it would just have been better to close it when that level is broken. I haven't really had any like very few trades this week. Like I said, only two trades, and I have seen very few opportunities as well. I'm one I'm very interested in though is NCD CAD. I'm looking at this. There's very clear FTAs here. We're at a weekly and daily level, and also if we look at the reload zone here, it's right inside the reload zone as well. So NCD CAD is one pair that I'm really interested in. And now what we see here on the daily is that there's some buying pressure coming in here, and of course we have the interest rate decision for the Canadian dollar as well coming up today, which might be the catalyst. And it's interesting that most of these most of these news events, they come when prices at the support or resistance, like high time frame support or resistance. And there is when you're at support, there is of course I would say slightly higher probability that the price will bounce historically, but giving on the individual news event, on the individual happening, it's just completely random because the market participants that's in the market right now, when it's not the same people that were in the market on the last interest rate decision, and the conditions are just completely unique and new. So looking at one individual happening to the next, and the outcome is completely random. But as you can see, when price hits this level, there is a higher probability of seeing a bounce when you look at the bigger picture. But this event right here, we might just break down. It's basically 50-50. We can bounce, we can break down. It's basically 50-50. So I'll have to wait for the confirmation. Wait, is it actual Rich in the chat?
I'm not sure. I think he is. I'm not sure.
Is that the actual Rich?
I have no confirmation that it is Rich, but it may be.
If you are Rich, tell me something that only the real Rich would know.
or send me a WhatsApp.
Not say any secrets. Unlike no secrets. Remember, it's a public chat. This one. Will the real Rich please stand up? Okay, so yeah, this is one of the pairs that I'm negative. Risk reward is the best. I think you know this is not good enough, because I think most people know that you like negative risk reward. Sorry, man. I don't buy it. I don't buy it.
Yeah, you have
Definitely
to
not.
convince
I don't
us
buy it. Yeah.
with something better
Yeah.
than that.
So you can do better.
I would say, how can we test if it's rich or not? A good identity test that only the real rich can pass.
Write your phone number in the chat. Not a good idea. Okay. Let's see. We got NCD CAD at high time frame support right here. Then we got AD CAD broke below support. You know what? Let's take a look at this, because we are like, is he rich? Yeah, that's what we're trying to figure out, if he's rich or not. If it's rich, I
No,
don't know
he
if
is
he's.
rich.
Oh yeah,
Rich is rich,
he
but I'm not
a
sure if
rich,
it's
yeah.
the rich.
Okay.
Yeah, but jokes aside, I was stopped out for transparency sake. I was stopped out, but I saw on the lower time frames how price was reacting to a structure which I took advantage of. So I'm again in the trade with a small position again. And the overall general idea hasn't been invalidated, but my stop was based on a smaller time frame structure, which was not respected. So that could be the beginning of a deceleration that I was mentioning. If that's the case, then it will stop me again, and that should be clear that I should not, the deceleration has started, or at least there's a good chance it has started. But if not, then maybe I got in at the second structure or defense line, and it should work depending on the news, of course.
You know, I removed the drawings from here, and I went to the weekly line chart. And by the way, this comment right here, yeah, I would love to have a high win rate, high R system as well. And if you find one, just let me know, and create a course, become a millionaire, something like that. So, okay, AUD CAD. So what I did was I kind of tried to look for a new perspective here. On the line chart, this is a good weekly level right here. And on the daily, this kind of makes sense as well. I mean, there's a lot of reactions to this level here. And let's see if we go to the, if I put the, this is not going to be the reload zone though, which doesn't really matter though. But well, actually kind of is. If the daily candle is going to close above the 0.786, that's still valid. So yeah, okay, so this is actually a somewhat of a valid level here. So I'm going to be keeping that on that list. Then we got use. Wow, okay, USD/JPY does not that does not like whatever's going on right now. This idea is completely invalidated. So I'll move this down. What about NCD USD? Yeah, this is also actually. Do we have support down here? No, not really. Yeah, no, I don't think we like that.
Alex, yes, I did. It reacted on a 30-minute order block, and it did that perfectly. And I saw it on the lower time frame, so I had another signal. The first one was taken out, of course, as I said, and now it is reacting as it should when it gets back to a bullish structure. And let's see how it continues. But it's promising.
Yeah, so we're about 10 minutes away from news. At EU is I'm moving EU down. Yeah, so right now I think NCD CAD and AD CAD are the two most interesting ones as of now. If I can go through this list, what about GBP USD? You know what? This is not what I'm looking for. Again, I'm just going through the markets here and I'm trying to find something
There
something of
is
interest.
a chart that I want to show. I know
Yeah.
it's a pat on my own back, but maybe it's still worth showing. Yesterday we had a for those who were present in the YouTube session. Let me put my screen on. Yesterday we were looking to short. I was looking for a short when Anastasia was on, and she and I confirmed, or I had that same confluence of the same TP being where price was probably going to be hitting. Right. Yesterday we were, let's see, we were around this area. Right. So we were around here, more or less, and both she and I confirmed that price is likely to go to that TP area to go interact with those order blocks, either the daily or the 4 hourly below us, right? And it's not about me showing when it works well, but this is why I trade order blocks, because market comes into them and it reacts nicely from that area, right? And that's where my TP, I didn't get a signal, but if I did have a signal, that would be my target where I would want to just close the trade, because to me it went from the daily order block to another daily order block. And that's how nice, a lot of times it can work, not all the time, of course, but that's something nice to show. And we can see these the TP on yesterday's session, for those who haven't seen it on YouTube.
Wow, talk about closing gold too early. Look at this.
Nice. It's a nice move. And actually, if I of course, Captain Hindsight, but
Yeah.
if you look, if when we said that there is an outside bar being created at that close, right? Could you show my screen, or I will, let me put that back. When what we just mentioned was that there is an outside bar that is being closed, and I thought that's why I entered before the close, and I didn't wait for it to come into that area to move out, because it's been so bullish. It has a good chance of just continuing without retracing yet, or not yet, but again, I mean, and it came all the way after closing, retests that order block and moves away. And it was in that, it took me out the first time. And when I saw on the lower time frames on the, I think it was the 30-minute, yeah, it had that reaction on that 30-minute order block, right? It's not coincidence that it reacts like that on that. That's because of the order block right there, right? And if you go to the lower time frames, you can see how the market closes with a bullish engulfing after that see that price action. And if you go to lower time
Yeah.
frames, you can see there's that wick, that pin bar, right? So on many different time frames, you can see something change with the market once it reaches that order block. And that's the beauty of it, right? It forms that order block, comes back, retests it, and moves away. But it does that in all the time frame. It does that on the 30-minute. It does that on the let me get this right. It does it on the, that's the close, the formation of the order block, goes back, retests it, and moves away. It does that on all, that's the fractal nature of the market. It does that on different levels. And that tells you that that's probably the, what the market is trying to do, which is going higher, using demand zones or bullish order blocks as, like a, how do you call them again? Jumping trampoline, using them as trampoline for for its move higher.
Yeah. Right. So we got 5 minutes until we got the news, and I would not be surprised. Like we're probably gonna see a move for sure. That's we usually get a move on gold because gold is quite volatile, and yeah, it's interesting because we do have CAD news and USD news coming out at the same time. So it's going to be significant because gold is obviously affected by both the USD and the Canadian dollar. Those two
I'm
currencies are obviously very correlated to each other.
I'm going to take the profit. I lost $100 with the first entry, and since this is not the usual way I trade, I try to be a little more cautious. I think that I will close part of it, not all of it, just because of the news. And this time I have, so I will take some profits here and leave
Good.
leave only a section in, right?
Yeah, I think that's a great place to take some profits. Definitely, that's a great trade right there. Right,
Okay.
let's see.
I'm going to switch back to the other one. In the meantime, I'll put your screen on. TradingView is better for the analysis, so it's
Yeah.
much more visually rich than MT5.
Okay, so we got Euro USD, then we have S&P 500 to the upper right. Then we have gold here. It's going to be interesting to see. And we've got Bitcoin in the lower right corner as well. Get a question there, Victor. Do you trade? Yeah, that one.
The thing is, what we try to do is show you guys how we operate in the market live. And with my main strategy, my entries are infrequent, and so it doesn't give me a lot of opportunity to show you, entries and management and closing. So I need to adapt. I need to adapt that a little bit for the format of our YouTube. So the answer is no. This is not how I trade exactly, but it is based on the same idea. I used, of course, the same analysis. I use the same structures. My entries are different. I'm much less selective than how I trade normally in my main strategy, and so I will deviate from how I normally trade. And my rules that I have I can't apply them here because this is more discretionary. I'm just following the read and entering on demand area with the trend. So it's very similar, but for someone who is strict with the trade plan, this is not how I trade. I don't know if that answers the question adequately, but that's what it is.
Do you? Well, actually, let's look at price action here. We have about 10 seconds right here. Let's see what we are getting. I'm not in the market right now, so obviously just staying neutral here. Ooh,
Well,
yep,
look at that.
that's news. Right, not a huge move on. Yeah, not a huge move because we're looking at the 5 minute right here. Let's go to the 1 minute. You can see on the 1 minute as well that the initial move is not that big.
No,
Probably going to
and it
be
only
a
yeah, the first minute only went to the about 50% of that leg of that impulsive move
yeah.
of the last couple of minutes. That is not necessarily, even though it went down, it's not necessarily a bearish sign, right? It's a healthy retracement into 50% of the move it just did. So I would say it is still slightly bullish, even though the initial reaction was to the downside. I'm talking about gold, of course.
Yeah. So, are you ever using a trailing stop?
I am no, I don't actually, not a mechanical one for sure. I have tried different ones. The best ones that I have tried, and it depends on how you trade, but the best like mechanical trailing stop that I've see or used in the past, that I don't use it anymore, is the 13 EMA on the 5 minute for intraday trades. When market has been respecting it a lot, many times, multiple times, then it is a good way to get out of the trade before or right at the deceleration, because when it decelerates, it's probably not going to respect that 13 EMA on the 5 minutes anymore. But I stopped using that long time ago because it's not optimal for my my profitability. I am much more profitable putting my TPs at the next order block on the opposing direction, or the opposing from, if I'm bullish, I'm going to be putting at a bearish order block. That's way better. So I don't use trailing stop. And but I mean, it depends on your strategy. If you have data supporting trailing stop being something good for you, then by all means you have to use it. It doesn't, the fact that I don't use it anymore doesn't mean it's not a great idea. For my strategy, it seemed not to be the best way to manage my trade. And gold is going up again. We're
Yeah.
up. We are at the area I took profit, and we'll have to see, can it take this over this wick, this price? I would expect it would, right? That
Yeah. Now
reaction
it's
coming
looking.
back.
Yeah.
That reaction
So
coming back seems
obviously,
like it's going to continue. It's the expected move, right? We have been having bullish order blocks, bullish order flow. So the expectation is that price is likely to continue on that path. And the fact that we just we have just undone that initial reaction confirms, even though it's only preliminary, but it confirms that idea that we're probably going to continue to go up.
yeah. No, this is a good one right here. Not. I'm not in a. I'm not in a long. I'm. I sold that position and not looking to trade this. What I am looking at those NCD CAD and AD CAD. So obviously with the news here, it does look like whatever we got from the news. But actually, I'm going to take a quick look and see what we actually got from the news. So
Yeah, I didn't check
inflation.
that either. Which is not surprising, because we don't trade the actual news. We trade the price action.
Okay, so the interest rate was actually 25 points higher than forecast.
Okay, so there is a change. And what was the expected?
Yeah.
Oh, the forecast. Okay, that's what you
Yeah,
said.
forecast is 4.5 and it's 4.75.
But it is unchanged. The previous was 475. So the
Yeah,
market expected a rate cut, and they didn't get it.
yeah, exactly.
Yeah.
So,
Okay.
which,
Hold on. I see the overnight rate. Are we seeing the same thing? The overnight rate on Forex factories is that it did go to 4.5. Maybe we're looking at different different metrics or different news. Maybe there were more than one that came out. If you look at the Forex factory, it
yeah,
says there
I
is
see now it says 4.5, but then when I look at the,
that's odd,
um,
right?
it is.
to me, it doesn't since I don't use that information for my trade plan, whether it's good or bad, it has very little consequence on my decision. So I tend not to, it's entertaining and it's good for your, overall view of the market to know what happened. But at the end of the day, for me, I trade strictly price action, and whether it's good or bad, the number that came out is not going to stop me from getting in on a signal, and I'm not going to get in without the signal anyway. So it has very little consequence, the actual number. So
Well, it's weird that looking at financial juice, it says that Bank of Canada rate decision actual 4.75, but then I look at Forex Factory and it says 4.5.
maybe they're not the same rate, right? Is the overnight
Oh,
rate the same? That, I mean, maybe I know they have, the central banks, they have different tiers, right? Different
yeah.
rates.
So what's
You
the
have
what's the
one.
difference here? What's the difference between overnight rate and this is weird.
Yeah,
Yeah, I gotta look that up.
you have different rates for different duration, right? The very short and longer and so on. But it's okay. It's whatever it
Okay,
is,
no. So the
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 market.
rate decision the rate decision is 4.5. I actually think that this might be a typo on financial juice because it says 4.75. Then when I look at the another place here, it says 4.5. So yeah, it's a dead cut rate and it's as expected. So with that in mind, I think. It's pretty much business as usual, which means that I do suspect support to act as support here. So for both AUD CAD and NCD CAD, I will be looking at longs. However, I think it would be safe to wait for perhaps this daily candle to close before going in, or if there's a very obvious break of structure here. So we can go on the 1 hour, and if we see something like this, I might want to trade it because now we see obviously there's a change in behavior because we're seeing this structure right here. The trend has been very clear here, and then we have a pause here. But if we see something like this, that might also be a signal for me to enter. So what I'm going to do is I'm going to put an alert at that high. Maybe even above that high, because if price gets above that high, that means we have a change of structure. And then we go to NCD CAD, and we have basically the same structure here. We can go to the 4 hour, and if we then get something like this, that would also be a signal for me to enter. So I'm going to be putting an alert right around that high as well. And with the way price action is moving here, it does seem like I might get an entry on both of these at the same time. And what I'm doing in that case is, and also now that we zoom out on the 4 hour, we see obviously that we're below this range right here. And so I would want to reclaim that support. We've lost support, and it's potentially going to be used as resistance. So I think I want to see reclaim of that previous of that support. I want to see this get reclaimed as support. We might be seeing something similar on AD CAD. Yeah, so basically on AD CAD, it's just going to be the upper part of this range. So yeah, 2 trades, and I'll be taking them with half an hour each if they activate at the same time. All right, Victor. I think that's it for today. I think we do have something. I potentially have 1 or 2 more trades this the rest of the week, and other than that, I think have had quite a slow week in the market this week, but I do think that we're setting up some of the moves that we saw this week. So basically, we saw this from NCD CAD. I mean, it's definitely setting up for a potential bounce here and a new trend to form here. So that trend might be tradable going into next week.
Nice indeed. I'm looking at EU.
Gold would have hit that TP, by the way. So gold would have hit that TP right there. Obviously, I wish I would have stayed in gold, but it is what it is. I took the right decision. I took profits before a news event, which is better than having the complete different reaction. And by the way, our thoughts on gold. I'm gonna have Dirk on next week, probably on Tuesday, and we're gonna be focusing on the first segment of the live stream is gonna be focused on Bitcoin. We're gonna be talking about our long-term views of Bitcoin, and when I say long-terms, we're talking about months to years going forward. So that would be a good show to watch
Good
if you're
information.
interested in. Yeah, if you're interested in investing in Bitcoin. Looks like I'm blurry. My camera is out of focus, which it's telling me to end the live stream, I think. All right, guys.
It's always great when Dirk can come and share his vast knowledge, crypto knowledge with us. He always has some good points. I have to admit, he's his crypto enthusiasm rubs on many people, me included.
Yeah, definitely, and that's going to be very interesting. And yeah, we've got a few interesting things going on next week, so make sure that you tune in next week as well. And I want to thank you all for joining this week, and I hope to see you all next week. Take care, and trade safe. Use a stop loss.
Yes, if you like our show, don't forget to hit the like. We see you again in our next session. Take care. Bye-bye.
Take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and